Hi everyone and a warm welcome to our channel. I hope you are doing well. Studies and preparations are going on in continuation to our revision series for CA Final IDT in complete 100% English. We are starting with our next chapter, chapter number 6, value of supply, right? The entire playlist has been created. Chapter 1 to 5 are available in that particular playlist. Ensure you are watching that before proceeding to chapter number 6. Okay. So now basically with respect to valuation, what is the purpose of this chapter? What is the key question that we are trying to answer? Because every chapter helps us to understand one key question, right? So here the topic is what is the value on which we are going to apply the GST rate, right? The taxable supply, what is the value of the taxable supply? For that we are going to cover section number 15 read with various kinds of rules. Let's start formally with section number 15, value of taxable supply. Obviously if the supply is exempt, then we are not going to value it. So value of taxable supply. Section 15 subsection 1. Basic if I ask you what very primary question, that what should be the value of supply, what will you say? That sir, the price which the recipient is paying to the supplier will be the value of supply. For example, I am selling my class, I am charging you, let's say 5,000 rupees for GST class. Then on what value I am going to charge GST? That is normally 5,000, but there are two essential conditions which need to be complied for the transaction value, that is the price being paid, to act as a value of supply for the purpose of section number 15. If any of those two conditions are not met, or if the supply is notified by the central government, then we have to go and take help of the rules that we are going to study. I hope this is clear. Let's start with the basic section, subsection 1, 15 subsection 1. Value of supply is the transaction value, that is the price paid to the supplier, but that is subject to two conditions. How many conditions? Two conditions. Okay. Let's first see what is the transaction value. Transaction value is the price actually paid or payable, you have paid or you are going to pay in future for the said supply of goods, services, or both, subject to two conditions. Just read these conditions, understand the logic. It will be properly clear as to why these conditions have been set. Condition number 1, where the supplier and recipient of the supply are not related. Not related, we have already covered in chapter number 1. So where the supplier and recipient of the supply are not related. Now let's say if there is one student who happens to be my relative, chances are that GST law assumes that I will not charge the full value to that person. Chances are, reality, I may be charging him also 5,000 rupees, but GST law will say no, now we are rejecting the transaction price. Please take help of the rules, right? So first condition is they should not be related. Second condition, price is the sole consideration for the supply. For example, if a student says that sir, I will pay you 3,000 in cash, and with respect to balance fees, I'm going to give you a watch of, let's say, 2,000 rupees. But now again, whenever a non-monetary thing comes into a picture, whenever in-kind consideration comes into a picture, then we have to go to rules for the purpose of valuation. So the primary rule, what did we study? That the value of supply shall be the transaction price provided two conditions are met. Condition number 1, the buyer and seller are not related to each other, and condition number 2, price is the sole consideration, money is the sole consideration. I hope this is clear. Now there comes subsection 2 and subsection 3. Subsection talks about certain inclusions in the value of supply. Subsection 3 talks about certain exclusions from the value of supply. Both of these are clarificatory in nature. Subsection 2, inclusions in the value of supply, meaning which you are going to include this in the value of supply for the purpose of calculating GST. Let's see clause number A. Any taxes, duties, cess, fees, charges levied under any law for the time being in force. So in short, this means all the taxes which are not subsumed under GST, you have to include in value of supply. So basically, other than GST, whatever it is charged separately in the invoice, for example, municipal tax, X tax, Y tax, whatever it is, you are going to include that for the purpose of levy of GST. This is simply clear, plain and simple. B, this is important. Read, then I will take an example. Supplier's obligation paid. Any amount that the supplier is liable to pay in relation to supply. I am a supplier, I was liable to pay, but this was incurred by the recipient of the supply, and second condition, not already included in the price paid or payable for the goods, services, or both. Let's take a simple example that will help you clarify all these points with respect to clause number B. Let's say I am an event planner. Okay. Let's say I planned an event for Mr. Anand Ambani. He is my client. I'm a big shot event planner, right? So I planned the pre-wedding celebrations of Anand Ambani. Okay. Now, while I was planning, Mr. Ambani happened to be at the venue. One of the vendors which I had called for the purpose of this celebration, vendor was with respect to cool drinks, right? So this vendor came and he kept all the cold drink boxes at the venue, and he called me. He said, Mr. Siddhesh, I have kept the cold drink boxes here, and now pay me my amount. Let's say this amount was 10,000 rupees. Now I asked this person, let's say he's Mr. Rakesh. I asked Mr. Rakesh as to Mr. Rakesh, let's take the hypothetical example of the conversation. Rakesh calls Mr. Siddhesh, as you asked, I have provided the cold drink boxes, amount due for the invoice is 10,000 rupees. Please pay me because I have delivered the goods. Now I say to him, Mr. Rakesh, I'm not there yet. I'm not available. So I'm not able to pay you right now. This conversation is heard by Mr. Anand Ambani. Mr. Anand Ambani comes to Mr. Rakesh and says, what is the problem? Who are you talking to? He says that I have given this cold drink boxes and Mr. Siddhesh has to pay me 10,000 rupees. Mr. Anand Ambani says, okay, let's do one thing. Since Mr. Siddhesh is not at the venue, I will pay you 10,000 rupees. I will pay you 10,000 rupees and I will adjust this 10,000 rupees with Mr. Siddhesh later. So, okay, Mr. Rakesh is happy. He got his 10,000 rupees. Mr. Anand Ambani paid that 10,000 rupees. So now link this to the words of law. This is a obligation of supplier. I had to pay this 10,000 with respect to the supplier that has been incurred by the recipient. Okay. Now, after all the wedding celebrations are done, all the dance party, everything done, now I send my final bill to Mr. Anand Ambani, the invoice bill, whatever the amount is, let's say 1 lakh, I reduce 10,000 rupees. Why? Because this has been paid by Mr. Anand Ambani, that I will set off. Now tell me one thing. GST should be leviable. GST should be leviable on 1 lakh rupees or 90,000. So this is amply clear now. It should be on 1 lakh rupees. So basically, subsection 2 clause number B comes and says that this was the obligation of supplier paid by the recipient. You have to include it in the value of supply provided it is not already included in the price. Now, when I say 90,000, it is obviously not already included. If it had been 1 lakh, it was included. So if this is 90,000, then we have to add 10,000 pursuant to section number 15, subsection 2 clause number B. I hope this is absolutely clear, right? This is a same example, kind of a similar example that is given in your ICS study material. Okay, now let's move ahead. Ensure that the condition is this was the obligation that supplier had to pay in relation to such supply. If let's say Mr. Rakesh had some amount due from me with respect to some other thing not related to Mr. Anand Ambani's celebration, then obviously in the price paid payable, I'm not going to exclude 10,000. Even if I exclude, then also it will not be included here. Why? Because sir, that amount is not related to the supply. Here it should be linked to the supply. It is an obligation of the supplier but paid by the recipient. Next, incidental expenses, example commission, packing, charged by the supplier to the recipient, and any amount charged for anything done by supplier in respect of supply. Now basically, let's say recipient says that I want a separate packaging, I want a separate a separate kind of a fancy packaging for which I will pay 5,000 extra, so 5,000 will be included. Other incidental expenses, commission, packing, whatever I am charging, but ensure that this charge by the supplier should be at the time or before the delivery of goods. Before the delivery of goods, right? In case of services, this is generally not applicable. This is applicable in case of goods only. But yes, if applicable for services also, we have to see at the time or before. Whatever happens after the delivery, after the supply, obviously GST is not going to be charged on that, because now that is a done deal. Later on, whatever recipient does, it is not concerned with me. Interest or late fee or penalty for delayed payment of any consideration of any supply. Now, I don't know if you remember this or not, but this concept of inclusion of interest in the value of supply, we have done at 2 places earlier. In chapter number 1 was the example of DCA that we covered, that interest should be a part of the supply or not. And second, the example that we did, if you remember the example that we did, that I am taking a phone on installment from the person itself, and then if I do not pay the amount on time, installment on time, then interest amount has to be included in the value of supply pursuant to section 15(2)(d). So this you have to remember, and I hope this is linked to the 2 instances which I just referred. So any interest, late fee, penalty, that is also part of supply. Okay. Next, subsidies. Subsidies have to be included provided they are directly linked to the price. Directly linked to the price means, let's say 5,000 was price and 500 was the subsidy. So 4,500 plus 500. But if the subsidy has been given by the central or state government, you have to exclude it. So just take a simple example. I am let's say we did this kind of a thing in consideration definition also, that if let's say I'm charging 5,000 rupees from you, and let's say Modi Sarkar, central government, tomorrow comes to me and says that you charge 4,500 and we will give you 500 rupees as a subsidy. So in this case GST will be leviable on 4,500 only. But let's say tomorrow Tata company comes to me and says charge 4,500, we will pay you 500, then obviously GST has to be charged on 5,000 rupees. So if it is directly linked to price, it will be added to the value of supply of the supplier. Which supplier? Who receives the subsidy. Who receives the subsidy because he is going to reduce the price, so his price has to be increased. Next, so 15.2 is clear. 15.3, exclusions from the value of supply. Value of supply will not include any kind of discount. Now with respect to discount, we have to cover clause number A and clause number B. First, discount given before or at the time of supply. This is a simple plain clear case of kind of a trade discount. So trade discount or any other discount which is recorded in the invoice. So this is a pre-supply discount. So let's say in the invoice itself is shown as 10,000 minus discount 1,000. And the final amount is 9,000. So 9,000 will be leviable to GST. This is a no-brainer. Like there is no much analysis involved. So let's see. Discount given before or at the time of supply. Condition: the discount has been duly recorded in the invoice. In that case, this has to be excluded. Case number B is a bit important to be noted. Please see. After the supply has been effected. After the supply means supply is done and later on there is a discount involved. Now whether this will be excluded from the GST. For that you have to see two conditions. Now before coming to the conditions, you might be having a query that sir, if supply is done, invoice has been issued, later on discount is given, how will we record that invoice? So it will not be recorded in the invoice. We will be issuing a credit note. What do you mean by credit note? That I will be paying some amount back to the recipient. Why? Because this is a post-supply discount. Had this discount been the pre-supply, then the recipient would have paid me the net amount, the lower amount. But now since this discount is after the supply, I will be issuing a credit note, and that credit note will involve the GST portion as well. Now please understand, with respect to post-supply discount, you have to see two conditions. Condition number one, there should be an agreement with respect to the discount. If there is no agreement, it means it is an ad hoc kind of a discount, then it will not be excluded from the value of supply. And condition number two, the ITC with respect to discount portion has to be reduced by the recipient. Sir, we didn't get this point. Let's see from short example. Let's say I am a supplier and this is my dealer. Dealer means he's kind of my agent who helps me sell my product. I told him, example of a post-supply discount, I'm taking it here. I told him that if you are able to sell 10,000 units by the end of the quarter, I will give you additional 5% discount. Let's say that 5% discount happens to be 1,000 rupees. So if this Mr. A, he is able to hit the target of 10,000 units, he will get an additional discount of 1,000 rupees. And let's say the original supply amount is 10,000. If he meets the target, 1,000 will be reduced, net amount will be 9,000. Now tell me one thing. During the supply, during the invoice, what was the amount charged? 10,000. In the invoice, what was the amount charged? 10,000. What was the GST portion? Let's say 18%. So 1800 GST, total 11,800. Now, let's say Mr. A hits the target. Now, I will issue to Mr. A a credit note. Credit note, why? Because I will be paying him 1,000 rupees. That is the discount portion. Now tell me one thing. What are the two conditions that need to be met? Point number one, that there had to be the agreement. Condition number one is agreement should have been existed, and that agreement should be stipulating these kind of conditions. What? That if Mr. A is able to hit the target of 10,000 units, then I will give him a discount of 1,000 rupees, right? It shows that this is a genuine case of discount which was contemplated even before the case of supply, even before the actual supply. Condition number two is that ITC needs to be reversed by Mr. A. Now what do you mean by reversal? Tell me one thing very, very clearly. Don't learn this, just understand. When I charge him 10,000 rupees, how much ITC did he take? 1,800. Now let's say I'm giving him a discount of 1,000. What is the net value? The net value will be translated to 10,000 minus 1,000. That is 9,000. Now tell me one thing. With respect to 1,000, 18% of 1,000. This is the excess credit taken by Mr. A. Why excess credit? Because now the value of supply is 9,000, because government is allowing credit note of 1,000. So with respect to 1,000, if supplier wants to reduce his liability means because of the credit note, his liability will reduce, because the net taxable supply is going to be now 9,000 into 18%, right? Wait a minute, let's see this comprehensively only. Now this is 1620. Okay, but what is the ITC taken? ITC taken is 1800. So difference of 180 needs to be reversed by Mr. A. Because on one hand, the government will allow me to reduce my supply with respect to credit note, reduce my supply, and obviously the GST portion will be reduced. But on the other hand, ITC also has to be reduced. Government will not allow ITC of 1800 and allow the reduction to supplier. That will be a loss for government. See, whatever the net payment he is doing of GST, that will be the ITC, na? That will be the ITC. So here now net GST payment is 1620, because when he issues credit note, this differential 180 will be reduced by supplier. Hence ITC also needs to be reduced. This is my second condition. If these conditions are not met, then reduction will not happen. Okay. So you can check the examples. These are cash discount. Let's say he pays in time. So obviously we don't know whether he is going to pay in time or not. Hence these are post supply discount. Performance basis discount, the example that we took, conditions are clear. Now, subsection 4. Value of supply not possible to determine as per 15 subsection 1. What do you mean by this term? What do you mean by this phrase that value of supply is not possible to determine as per subsection 1? Means one of the essential conditions are not met. What are the two conditions? Condition number 1, supplier and recipient should not be related to each other. So if they happen to be related, or condition number 2 is breached, that is price is not the sole consideration. If that is the case, we have to go to rules. Secondly, in subsection 5 also, there are certain notified supplies. For that, we have to refer to rules only. So there are two cases when we have to go to the rules. One, section 15, subsection 1, conditions not met. Second, notified supplies. Okay. Meaning of related person we have already done. So basically, three valuation cases are possible. One, 15 subsection 1, that is conditions are met. Value of supply will be the transaction value. Second, 15.4 with rules, basically conditions were not met. And 15.5 plus rules, basically these are the notified supplies. Hope this is clear. So these are the three instances that we are covering in this particular chapter. Now, there are certain clarifications. Let's see. Is TCS of income tax act includable in value of supply? This is the wrong question. Why? Because TCS is not a tax. This is a way of tax collection. Hence, obviously it is not included. Next, supplier's obligation when paid by the recipient is included in the value of supply only when the supplier is under contractual obligation to pay the third party and said payment is with respect to supply. This we cleared properly in subsection 2 as well, that supplier should be under contractual obligation to pay. Now I was under contractual obligation to pay that Mr. Rakesh who supplied the cool drinks, and second, it should be related to the supply. The supply was with respect to the event management service that I was providing to Mr. Anant Ambani. Okay. Now, coming to this example, this is the topic which comes in every chapter, the case of OEM and CM, original equipment manufacturer, let's say Apple, and component manufacturer, let's say Tata. Now, value of supply made by a component manufacturer, example Tata, using molds and dies owned by the OEM, example Apple, which are sent free of cost to the CM. This chapter, this particular topic issue, we did cover in chapter number 1 as well. Now, with respect to different chapters, the issue also changed. In chapter number 1, the issue was whether this is supply or not. There we concluded that this is not a supply because consideration is not involved. Here now the focus of the question and the issue that we are trying to answer is that whether that value of molds or dies will be included in the value of supply by Tata to Apple. Answer is no. Why? Because as per the contract, the molds and dies were to be supplied by the Apple, that is the original equipment manufacturer. Hence, it is not to be included in the value of supply. But sir, what if the contract said that molds and dies were to be owned by the company Tata, that is the component manufacturer, and now they are being supplied. Now they are being supplied by the other company, that is Apple. In that case, we have to include it in the value of supply. Now let's see. Clarified that the value of molds and dies shall not be included in the value of supply because it was not to be incurred by the component manufacturer, that is Tata. But if the contract required component manufacturer Tata to use his own molds and dies, but still they were supplied by Apple, now basically consideration will be reduced. This was the liability of Tata, which is made by Apple. Had it not been made by Apple, then the consideration would have been higher, right? So you have to include it in the value of supply. So the key question you have to ask, whose responsibility was it to use whose molds and dies? So basically, whose owned molds and dies were to be used? That is the key question you have to answer. Incidental expenses. this is a clarification. If the contract between seller and buyer is on ex factory basis, that is, seller has to keep the goods ready in the factory. Later on, outward freight and transit insurance is arranged by the buyer. It won't form part of the value of supply. Why? Because the contract was with respect to ex factory. The liability of the supplier, the responsibility as per contract was to keep the goods ready at the factory. Later on, whatever buyer does, he arranges the transport, he incurs the transport insurance. That is the headache of buyer. That is not a part of supply. So whenever you get any kind of a case study of inclusion of the value in supply, value of the supply, we always have to focus on what the contract says. If the contract puts a liability, a responsibility on the supplier, and that has been met by the recipient, you have to include in the value of supply. But if it is not the responsibility of the supplier, like in this case, beyond factory, it was not the supplier's responsibility, then I am not going to incur anything. Whatever he incurs will not form part of the supply, right? Another clarification. This is in case of incentives given by MEITY, that is Ministry of Electronics and IT, to acquiring banks under incentive scheme for RuPay debit card and Bhim UPI transaction. Basically, the small transactions up to 2000 rupees transactions, whenever are done by RuPay cards or Bhim UPI transactions, the companies, they do not charge anything from the customer. They get some kind of an incentive from the ministry, because ministry wants to promote these two types of transactions. Now the question comes that whatever that incentive is being received by these companies, is that consideration? Is GST is to be levied on that particular incentive that is received? Answer is no. Why? This is not consideration. This is not being paid by the recipient. This is merely an incentive, and that too given by the government. Government incentives we anyways do not include in the value of supply, hence no GST on this. So this is not consideration, and this does not form part of the supply, right? And we have already covered this, that government subsidies are not a part of the supply, right? Okay. Concept of commercial credit note. Now what do you mean by commercial credit note? See, credit note and commercial credit note are exactly the same. Supplier, if he wants to reduce the value of supply, if he wants to pay something to the recipient, he is going to issue credit note. But what do you mean by commercial credit note? For example, the credit note is to be issued, but the GST portion cannot be reduced. So what do you mean by that? Example, there is a case of post supply discount, but agreement did not exist. So can we reduce the value of supply? Answer is no, because one of the conditions was agreement basis. Now, when the credit note is to be issued, but GST portion cannot be reduced, we introduce the term commercial credit note. So this credit note is not for the purpose of GST. This is only for the purpose of commercial transaction, the commercial business, day-to-day business transaction, that I am issuing this credit note. Another example of issue of commercial credit note, let's say the time limit to issue credit note is gone. Time limit November, and that we study in tax invoice chapter. So let's say the time limit is gone, and now I'm issuing a credit note. So because of the time limit issue, the GST portion cannot be changed now, but I need to pay some amount to the recipient. So I will issue commercial credit note. In simple terms, commercial credit note means a credit note without any impact on GST. I hope this is absolutely clear. Let's see various clarifications of discount. Staggered discount, buy more, save more. This is a no-brainer. The discount is recorded in the invoice. You buy 15 items, we will give you 40% discount. It is included in the invoice. So this is a case of pre-supply discount. It will not be included in the value of supply. Year-end discount, volume discounts, these are post-supply discount. You have to see whether conditions are met or not. Secondary discount means revaluation post-supply. These will never be reduced from the value of supply because conditions are never met. There is never an agreement with respect to revaluation post-supply. So these are not included from the value of supply because they do not meet any of the condition. No claim bonus, is it a part of value of supply of the, by the insurance company to the insured? Now we did this concept in chapter number 1 of no claim bonus. That is, no claim bonus is generally given as the reduction in the premium. So let's say the premium was supposed to be 10,000, but there was a no claim bonus of, let's say, 1,500, and 8,500 is the final amount charged. So for the purpose of GST, the value of supply will be 10,000 or 8,500. Answer is 8,500. Why? It meets all the conditions of the discount. What are the conditions of discount? Agreement, reduction of ITC, all these conditions are met. So the value of supply in this case will be 8500. Why? This is a clear-cut case of pre-supply discount. The no claim bonus amount is shown in the invoice. Invoice means the premium related document that we receive, and this is clearly recorded in the invoice. The net consideration is 8500 with the recipient pays. So why we will include 10,000 as the value of supply? So 8500 is the net value of supply on which GST will be levied. Interest received, unless otherwise specified, it would be considered inclusive of GST. What do you mean by that? If in the question, this is tested sometimes in the exam, I have seen the questions in the material as well, that if let's say it is shown as to 2000 rupees interest was received, and we clearly know that interest is to be leviable to GST. Now the person is not going to pay anything above 2000. Like for example, he is not going to pay 18% of 2000 as an extra. So we have to reverse calculate this, and in my returns, this is done practically as well. In my returns, we will do reverse calculation, that is, we will assume 2000 to be inclusive of GST. So we will do 2000 divided by 118%. So 1695 will be my value of taxable supply, on which 18% GST will be shown, taking example that 18% is the rate. Okay, there is a short flowchart that I have made for the purpose of valuation under section 15. Let's see. First condition C is price is the sole consideration. If no, directly you go to rules. If price is the sole consideration but supplier and recipient are related, second condition not met, you go to the rules. Both conditions need to be met, that is, price is the sole consideration and supplier and recipient are not related, and finally you see whether this is a notified supply under 15.5. If not, then your assessable value is the transaction value. Otherwise, you have to refer rules 27 to 35 that we saw. Okay, now let's start with rules. Rule number 27. Value of supply when the consideration is not wholly in money, for example, barter, for example, exchange. So money is involved, but along with money, something else is also coming in, right? Okay, now we will apply priority wise steps here, that if step number 1 is not able to comply, then we will apply step number 2 similarly like that. Step number 1, you see open market value of such supply. Now please understand what is the case here. We have to determine value of supply when consideration is there. Consideration is there in money as well, but it is not wholly in money, means some kind portion is involved. Step number 1, you apply open market value. What do you mean by open market value? That is the transaction between unrelated person where price is the sole consideration. So if this is not the case, what will be the amount involved? That will be my open market value. If you have the open market value, then the story ends here. You don't have to move ahead. You apply that value, you apply GST on that particular open market value. But if open market value is not known, then you go to step number 2. Otherwise, at step number 1, your story will finish. Step number 2, you see consideration in money. Consideration, see, in this particular rule number 27, amount of money is involved, but it is not wholly in money. So whatever it is in money, you take that and you add money equivalent of non-monetary consideration if known at the time of supply. Let's say along with 5,000 rupees, there is a watch which was given. There is a watch which was given, and this watch is worth, let's say, 2,000. So you add 5,000 and 2,000 and you take 7,000 as the value of supply. This is my priority number 2. But if this is also not able to determine, we are not able to determine even this particular method, step number 2, then you go to step number 3. You apply this concept as value of supply is the value of supply of like, kind and quality of goods services. What is the difference between open market value and like, kind and quality? In this, we are comparing the goods and services which are similar to our supply, and we are taking that particular supply's value of supply as our value of supply. But what if this is also we are not able to determine? So this failed, this failed, this failed. Now we are coming to our step number 4. This is our 4th attempt. This is our 4th attempt to calculate the value of supply. You calculate this as consideration in money, whatever the amount is involved, plus money equivalent of non-monetary consideration. Now I know what query you are having. You are Pinku, this is our CA student. Now this person is having a query that you are also having. This, that is, sir, this amount is not known. Not known means, had this been known, we would have applied this in step number 2 itself. Okay, I understood your query. Please wait, please wait. I know if we had this value, we would have applied this in step number 2, but we don't have. So for the purpose of using this, we will calculate this value as cost plus 10%. We do not have this money equivalent value, so we will have a computed value of cost plus 10%. Now see, this student has the query that, sir, this is not known now. Otherwise, we would have taken this and computed the value of supply in step number 2 itself. Correct. That's why now we will apply rule number 30. Rule number 30, you might be confused as to, sir, why are we using rule number 30 in the middle of 27? Rule 30 and rule 31, they are not complete rules in themselves. They are to be used along with rule number 27 to 29. So rule 30 says that value of supply is cost plus 10%. Now this is taking a reasonable assumption that every person is going to charge at least 10% profit. So rule 30 says cost plus 10% and rule 31 says best judgment. Best judgment means where all the rules fail, 27, 28, 29, whatever the related rule 30 also failed. Now we will use best judgment. Best judgment means we will apply residual method, best judgment as to what the value of supply should be. Okay. One important point to be noted. Normally we go in sequence, that is we apply rule 30 first. If you are not able to apply rule 30, we go for rule 31. But in case of service provider, because determining cost of service is comparatively difficult than goods, the supplier of service has an option. He can use rule 31 before rule 30. Okay, now see, we will apply rule number 30, that is this portion will be calculated as to cost plus 10%, and this you already have. Okay, this is done. And but if this is also not possible, that is we are not able to apply rule 30 even here as well, then we will apply rule number 31, best judgment method. Okay, now analysis, let's see certain points. Rule 30, 31 sequence I've already told. Services option I've already told. Like, kind and quality, that is your similar product, similar supply, not exactly the same. Okay, so rule 27 is done. Rule 28 talks about supply between distinct persons or related persons other than agent. Why other than agent? Because agent is covered in rule number 29. What do you mean by distinct persons? That we have already covered. 25 subsection 4, 25 subsection 5. Let's say I have two units, two registered units, or one registered unit in Delhi and one unit in Maharashtra. If there is some stock transfer, so that will be covered in this particular rule number 28. Now, in such cases, understand that consideration may or may not be present, as such supplies are covered under schedule number 1. Supply between distinct persons is also covered under schedule number 1, that is deemed supply. So consideration may not even be there. Now here again we have to apply steps. We have to see whichever step is complied, otherwise we will have to move to next step. Step number 1 is open market value of supply. This is same as we talked about, but there is an important point to be noted with respect to open market value. If the recipient of such supply is eligible to take full ITC, then in that case whatever value is declared in the invoice is to be accepted as the open market value of supply. Sir, we didn't get this, please repeat. Okay, let's understand what I'm saying. If this is the supplier, this is the recipient, these are distinct persons, that is why we are applying rule number 28. Now, if this recipient is eligible for full ITC, right? So in that case, government says that whatever the supplier declares the value in the invoice value, that will be accepted as the open market value of supply. Now, this is the learning part. What is the logic? Logic is that government is thinking, GST law is thinking that what is the point of changing the open market value of supply? Let's say open market value of the supply was 10,000 rupees, but the invoice charged only 3,000 rupees. If the government and GST law comes and says, no, please increase the open market value supply of the supply to 10,000. What is the point of it? Because corresponding ITC will also increase. That's why they have put the condition that if recipient is eligible for the full ITC. So if 3,000 is increased to 10,000, GST on 7,000 will also increase. That person will take additional ITC. Earlier he was taking ITC on 3,000. Now he is taking ITC on 10,000. So net impact is zero for the government. So government says that if the recipient is eligible for full ITC, invoice value shall be accepted as the open market value. We will not dispute it. I hope this is clear. If open market value is not known, you take the value of like kind of like quality of goods and services. If this is also not known, rule 30 first and then rule number 31. Now, with respect to rule number 28, very important point to be noted. Please understand, I have put this entire 3-step rule in the box. Now, please understand that supplier has an option. He can ignore this step number 1, step number 2 and step number 3, and he has some other option, but this other option that I'm going to talk about is applicable only in case of goods, not services. Now let's see. Supplier has an option. He can ignore the above 3-step process and instead apply following method of valuation. What is that valuation method? Value will be 90% of the price charged for the supply of goods of like kind and quality by the recipient to his unrelated customer. So whatever price the recipient is charging to his unrelated customer, you take that price and you do 90% of that particular price and take it as the value of supply. Sir, why 90%? We are assuming 10% as his profit margin. Because I am transferring to him, he is transferring to unrelated customer. Let's say he is charging 100, so the value of supply between us will be 90. Now, point to be noted, this option is additional. The supplier may say, I don't want this option, I will go step number 1, step number 2, step number 3, or he may say, I want to ignore this, I will apply this particular option. This seems to be very simple administratively. Another point to be noted, this is only with respect to goods. The above box was with respect to goods plus services. I hope this is clear. Now see, the goods should be another condition with respect to this rule is that goods should be intended to be supplied as such by the recipient. Why do you say as such, sir? Sir, because if processing is done, if the goods are not supplied as such, then there is some value addition that the recipient is doing. In that case, we cannot take 90% of that price which is charging further. We have to keep the goods in the same condition, right? Because if value is involved, then obviously price is going to change. We cannot take 90% of that particular value of supply. I hope this is clear. So this condition is that goods are intended to be supplied as such means no change. And condition number 2, this is condition number 2, that this option is applicable only for goods, not services. Okay. Issues and clarifications around rule number 28. This was covered by your amendment for May 24. Please read this. Directors also provide personal guarantees to the banks for credit facilities received by the companies for which they are acting as the director. This is done without any consideration. Basically, the director is not charging anything for this personal guarantee. So, simple example, let's say HDFC is granting a loan to Reliance Industries Limited, and for this, Mr. Mukesh Ambani gives a guarantee that RIL will repay the loan, otherwise I will pay it. Now, this Mr. Mukesh Ambani does not charge anything from the company, but this relationship between them is covered by schedule number 1, right? So this will be covered as the deemed supply even without consideration. So what will be the valuation of this service which he is giving to RIL? It will be 0. Why? Because RBI mandates, RBI requires, and RBI prohibits any kind of consideration. So when RBI is prohibiting the consideration, so even if you go and calculate open market value, what is open market value? That what is being charged in the market, but in the market the price is 0. For this personal guarantee you cannot charge anything. So here also value of supply will be 0. I hope this is clear. Okay, so OMV is 0. Read this point. In exceptional cases where remuneration is payable to the director, generally it is not payable, but if it is payable due to some allowances by the RBI, let's say an example that director who gave guarantee is no longer connected to the management, he retired. Mr. Mukesh Ambani is now not connected to the management, and now he is receiving remuneration. In that case, you charge GST on whatever consideration he is receiving directly or indirectly. So point number 1, generally he is not going to receive any remuneration because RBI prohibits it. If he receives, you charge GST on that particular remuneration portion. Done? Okay. Now issue number 2, corporate guarantee. Now this is important. This was tested in your RTP as well. It can be asked in your exam also. Issue number 2, corporate guarantee to a bank on behalf of another related person or by holding company with respect to credit facilities to a subsidiary. So basically the above case was with respect to personal guarantees. The below case is with respect to corporate guarantee. Okay. So corporate guarantee when done between distinct persons, it will be a part of schedule number 1. Schedule number 1 means it will be a supply even without consideration. Right? Now, what is the valuation? So for valuation, rule number 28 sub rule 2 was inserted. The above rule that we covered, this is rule number 28 sub rule 1. Right? This sub rule 2 was newly inserted. It simply says that value of supply is to be taken as higher of actual consideration that is being given to the company which is giving the corporate guarantee or 1% of the amount of such guarantee offered. So if let's say guarantee is with respect to 50 crore of 1% or remuneration, whichever is higher. Simple calculation, no analysis required. You take the higher value and you apply the GST on this particular higher value. I hope this is absolutely clear. Okay. Now issue number 3. Internally generated services by head office to branch offices for which the branch office are eligible for ITC. 2 issues come. So the first issue is that head office may not be actually issuing the tax invoice. Now you remember that we covered this in rule number 28 sub rule 1, that if the recipient is eligible for full ITC, the invoice value shall be taken as the open market value. But what if the invoice is not issued at all? So how will we take the invoice value? But still it was clarified that it's absolutely okay. You take this value as nil. Because even if the invoice had been issued, we were going to accept that invoice value as the open market value because the recipient is eligible for full ITC. So it's okay if your head office is not issuing tax invoice, that is all right. Okay. Second, head office may not be including the cost of a particular component such as salary cost of employees involved in the providing said services. Head office is providing some services to the branch office, right? Now it is possible that head office is not incorporating all the cost. So the value of supply, whatever it is being charged in the invoice, if invoice is issued, now obviously here the issue was tax invoice is not given, but here tax invoice is issued. But now the what is the problem and the clarification is that what if each and every cost of the component, what if each and every cost is not included in the value of supply, then also value of supply is reduced. But government again clarified that it's absolutely okay. Why? Because sir, the case is ITC is available to BO. So government does not want to increase the value of supply, because if value of supply is improved, that is it is corrected, still the recipient has full ITC. So there is actually no point in that, right? At one hand you are increasing the value of supply, you are increasing the GST portion. On the other hand, the person is getting enhanced ITC. Okay, now read this. Apply Rule 28. Since BO is eligible for full ITC, value declared by HO in the invoice is deemed to be OMB. Now don't think that sir, tax invoice was not issued. That was in this case. We are talking about this case, right? So invoice is issued, accept that value as the open market value because the recipient is eligible for ITC. So hence, irrespective of the fact whether any particular component of cost is included or not, it does not matter because eligible ITC, the recipient is eligible for ITC. Now comes the question, and now this person is scared. See this emoji, this will help you in understanding what is going on. That what was the reason that we gave here for purpose of not including each and every cost? For example, let's say salary cost of employees was not taken. What was the reason we gave? The reason and the conclusion and the logic that we gave, that was that the recipient is eligible for ITC. So what is the point in correcting the OMB? What is the point in correcting the invoice value? But now what if ITC is not available with the branch office? Will clarification to this issue change? Answer is no. Still government said that okay, no worries, even if you are not including each and every cost in the calculation of your value of services, we will still allow it. Why? Because sir, this is the case of head office and branch office. It is practically not possible to include each and everything. Possible, it is practically, it may be the case that employees working for both are same. So how will we bifurcate the employee cost? Then we will have to go for as to how many hours the employee devoted here and there. What was the bifurcation? So that is quite difficult to read, quite difficult to compute rather, we can say. So here the government clarified that the cost of salary of employees involved in providing the said services from head office to branch office is not mandatorily required to be included in computing the taxable value of such services, even in those cases when ITC is not available. So this acts as a relief to head office. Otherwise, head office will have to go for all the detailed calculations as to how much employee time was spent on these services, so that the accurate value of supply of services is calculated. Right now, coming to rule number 29. Value of supply of goods supplied or received through an agent. Now point to be noted, rule 29 is only and only with respect to agent and only with respect to goods, not with respect to services. Okay, link this to your paragraph number 3, schedule number 1, that is invoice test that we cover, that if the supply is covered for the purpose of schedule number 1 between the principal and agent, then only rule number 29 will be talked about. Because if that is not a supply, then rule 29 has no significance, right? You have to go chapter wise. If something is a supply, then the question of valuation will come. So if schedule number 1 it is not a supply, rule 29 has no significance. So it is a supply. Now we are talking about rule number 29. Step number 1. Internally in step number 1 in rule number 29, there is an option to choose one of the two cases, right? Students commit this mistake. They assume this as step number 1 and this as step number 2. No. Internally in step number 1, they have been given an option to choose one of two. First, either you take open market value of the goods, or you take 90% of the price charged for supply of goods of like kind and quality by the recipient to his unrelated customer. So internally this option has been given. Supplier can choose either of the two methods, or if he is not able to apply rule number 1, both of these are failing, you apply rule number 30, otherwise rule number 31. In case of services, rule 31 before rule 30 is possible, that we have already covered. Okay, so rule 27, it is clear. It is when the consideration is there, but it is not wholly in money. Some part of money is there, but not wholly in money. Rule number 28, distinct persons, not an agent. Rule number 29, agent, but only in case of goods, not with respect to services. Okay. Now, our basic rules, 3 rules that we cover, 27, 28, 29 are covered. These are those areas where these are those particular rules 27 to 29 which we talked about when section number 15 subsection 1 conditions are not met, right? Related or those conditions. Now 15 subsection 5 also we said that there are some notified supplies for which regardless that your conditions may be met. What are the conditions? Supplier and recipient are not related and price is the sole consideration. Regardless of that, you have to apply these rules. Why? Because these are notified supplies. So these we are covering through section 15 subsection 5. Okay. So here conditions may be met, but since these are notified, we have to talk about those particular notified supplies as per rules only. Let's start. Now pictures, I think you are able to clear that what are we talking about? Betting, gambling and online money, all those points. Let's see. Online money is covered separately. In this, we are talking about betting and gambling. Okay. Supply of lottery by the organizing state. Now understand that lottery is regulated at state level. That's why it has been stated by the organizing state. Here you have to take higher of. Now let's read first, then I will give you a shortcut to learn this. 100 upon 128 of face value of ticket. 100 upon 128 of price notified in the official gazette by the organizing state, whichever is higher. Simply it means that what you have to do out of face value and notified price, this will be given in question. You pick the lower one. You pick the higher one, sorry. You pick the higher one and you do reverse calculation. What do you mean by 128? Now understand logically. On these kind of items and these kind of services, betting, gambling, obviously the highest rate of GST is going to apply, that is 28%. So we are assuming the face value and the notified price to be inclusive of GST. Hence what we're doing, whatever the higher value is, you divide that by 128%. So we are assuming this to be inclusive of GST. Whatever that value comes, that will be your face value and 28% will be your GST rate, right? So what you do out of face value and notified price, pick the higher one. In exam, you can show separately, but in essence, what we are doing, we are picking the higher of both and we are assuming that to be inclusive of GST. So we are dividing by 128%. Clear? Okay. Let's see next. Actionable claim of betting, gambling, horse race. You already know that these are taxable under GST. Okay. These happen to be specified actionable claims. So betting, gambling, horse racing, whatever the value of bet or amount paid to totalizer, 100% of that value is your value of supply. On that, you apply GST. So whatever the bet amount is given or total amount is given, that we have to take as value of supply. Totalizer is the device that is used to match all the bets in horse racing and all those cases, right? So see if you are talking about lottery or betting, gambling, horse race. So that is rule number 31A. 31B, this was an amendment. 31C also was an amendment. Pay attention. Online gaming, including online gaming money. This, please understand first, 31B and 31C override the entire chapter. So whatever section 15, anything else we said, we are overriding that. 31B and 31C act on similar lines. So let's understand first 31B. Value of supply of online gaming, including the actionable claims in online money gaming. So online money gaming, whatever you pay the children in various games like PUBG and all. So whatever amount is being paid, the value of supply shall be the total amount paid or payable or deposited with the supplier by way of money or money's worth. Mark this point, money's worth. So if let's say I am paying 100 rupees or let's say I am paying crypto worth rupees 100. So that will be the value of supply, right? Including virtual digital assets, for example, cryptocurrency. By or on behalf of the player. I am the player, that is the supplier. Whatever amount I am paying, that is the value of supply. On that GST is to be applied. Okay, now there is one question that what if any amount is refund or returned to the supplier? Let's say I paid rupees 100 and 10 rupees was given back to me. Will that 10 be reduced from the value of supply later? Answer is no. So 100 will be the value of supply. Okay, it shall not be deductible. Coming to rule number 31C. In case of casinos, that is we go and we buy chips, we apply our luck, we use our luck in various kind of games, card games, that all that happen. And if you get some time, just do one simple thing, read the case of Delta Corp. Delta Corp is the company which is running almost all of the casinos in Goa. They had a major case and litigation with respect to this concept and this issue of actionable claims in case of casinos. The worth of the company was 4,000 crore and it received GST notices worth 17,000 crore. Read that if you get time. It is an interesting case. So what happens in case of casino? Answer is same that we studied above, that the value of supply shall be the total amount paid or payable by or on behalf of the player to the supplier. It can be for the purchase of token, chips, coin, tickets, whatever name called, or it can be for participating in an event. So some events do not involve any purchase of chips. We directly apply the amount, so that amount will be included. So if there is some competition or any other activity, right? So that total will be the value of supply. Now again, if any amount is refunded or returned, let's say I bought chips of, let's say, 10,000 rupees in the Goa casino. While returning, I returned the chips of, let's say, 2,000 rupees. But still in this case, value of supply will be 10,000 only, not 8,000, right? So this is an example that we took of casinos. Okay, one common point with respect to rule number 31B and 31C, that is the casino and online gaming money. This is a gambler. Now he has a query, right? I have tried to make this also as a gambler, bearded guy. So now he says that what if I win some amount and use it further? Simple example, let's say I bought some amount, some chips worth rupees 10,000 rupees. Okay, from this 10,000 I won, let's say 5,000. I use this 5,000 again. Now will this again be concluded as the value of supply and GST will be applied? Answer is no. This 10,000 is the value of supply because source of 5,000 is 10,000. Read it. Any amount received by the player by winning any event, including any game, scheme, competition, anything that happens in casino or online gaming money, because this is common for both the rules, and that amount is used for playing by the said player in further event without withdrawing. Without withdrawing. I did not withdraw this 5,000 because if, see, 1 minute, had I withdrew this 5,000 and then again used it, it would have been the value of supply, but I did not withdraw it. I used it in my next game. So now, will that be a value of supply? Answer is no. This 10,000 will be the value of supply. So that extra amount shall not be considered as the amount paid or deposited with the supplier by the player, because I did not deposit it. I won it. I did not deposit it. I won it. I hope this is clear. Okay. Now coming to rule number 32, value of certain supplies. Here we are covering 5 specific supplies. Let's start rule number 32. These are various optional methods given. Supplier may say that I don't want this, I want to go for rule 27 to 31. But here it is not possible. Rule 31B, rule 31C, they override the entire chapter. Let's start. First we are talking about purchase sale of foreign currency. That is the money changer. Money changer. Let's try to link exemption chapter. Okay. Let's try to link the exemption chapter also. Let's see how much do we remember. Inter say foreign exchange sale between banks, authorized dealer, or banks and authorized dealer, it is exempt. So there is no question of applying this particular rule 32. This rule will only come into picture when general public is involved, because then exemption does not apply. Okay. So now in this particular rule number 32, in this case also we have 2 options. Method number 1, rule 32 sub rule 2A, and method number 2, rule 32 sub rule 2B. What I am saying, why I am specifically referring to the rules, it is possible that in the exam they may ask you to directly apply as per rule 32 2B. So you should have this, 1 minute, this should be method number 2. So you should have this ready in your mind that whenever we say method number 2, that is rule 32 2B. Okay, that is the second method, because it is possible they may not use these words method 2. Okay, now let's start with respect to money changer for a forex changer, method number 1. Now in method number 1, also case number 1, if one of the currencies exchange is INR, okay, let's say I bought USD, I am the money changer, I bought USD from the customer and I sold INR. So you have to take buying or selling rate of the foreign currency minus RBI reference rate for that currency include into total units of foreign currency. Simple case, let's say I bought 100 USD at 77, whereas actual rate is 80. So obviously I'm going to earn that 3 rupees per 100, right? So I paid less amount and I'm going to charge a higher amount for the person when I'm selling this. So in this case, 3 into 100 will be the value of supply, because these were the units. Now don't get confused, 77 minus 80 minus 3, no, you just have to take the difference, 80 minus 77, right? But what if this RBI reference rate is not available? Let's say this 80 RBI reference rate was not available. Then in that case, whatever gross amount of INR was received, in this case 77 into 100, you take that into 1%. If RBI reference rate is not available, you take 1% of the gross amount of INR provided or received. Why did you say, sir, provided or received? Because it depends on whether I bought INR or I sold INR. Okay. Next, case number 2. Let's say INR is not involved in the picture. I bought pounds, I gave USD. In that case, you have to convert both the currencies into INR as per the rate that will be given in question. You pick the lower one and you take 1% of such lower amount as your value of supply. As simple as that. Right? Now, method number 2. In method number 1, if you carefully look at this particular case, here the authorized dealer is practically disclosing his earnings, right? Here his actual earnings will be exposed as to 3 rupees per 100 per USD I have earned. To avoid that, to avoid the disclosure of true earnings, supplier may say that I want to apply method number 2. This is a slab based valuation. You have to learn the slabs, you have to apply as it is in the question. Let's see. Slab based valuation, but point to be noted, once exercised, you cannot withdraw from this particular option during the financial year. If currency exchange is up to INR 1 lakh rupees, please focus, I'm using words rupees, okay? So you have to convert that into rupees, and convert that means whatever amount is involved in INR, up to 1 lakh rupees, the value of supplier shall be 1% of the gross amount or 250, whichever is higher. So government says at least take the value of supplier as 250, at least pay GST on 250 rupees. If currency exchange is more than 1 lakh up to 10 lakh, then you have to take the value of supply as 1000 plus 0.5% of the difference between the gross amount of currency minus 1 lakh. So for example, if this happens to be 2,50,000, so in that case, value of supply shall be 1000 plus 0.5% of 2.5 lakh minus 1 lakh, that is 0.5% of 1.5 lakh. Okay, of 1.5 lakh plus 1000. Now there is no need to learn everything. This 0.5% we have to learn. This 1000 came from 1% of 1 lakh, right? So because we are talking about more than 1 lakh, so up to 1 lakh they are charging 1000, that is 1% of 1 lakh. Next, if the amount is more than 10 lakh, 5500 plus 0.5% of difference or 60,000, whichever is lower. Now here also this 5500, how is this computed? On 1 lakh we charged 1%. On this will be on 9 lakh, that is up to 10 lakh. Up to 10 lakh, out of 10 lakh, 1 lakh is covered, balance 9 lakh, you charge 0.5%. So this will come out to be 4500. So 4500 plus 1000, 5500 plus 0.1%, because now amount is more than 10 lakh. So we reduce the percentage a bit and difference of the amount. So let's say if the amount involved is, let's say 15 lakhs, then what the value of supply will be? Value of supply will be 5500 plus 0.1% of difference. So 15 lakh minus 10 lakh, 5 lakh. What will this amount come out to be? 5 lakh into 0.1% plus 5500, 6,000 or 60,000, whichever is lower. Okay, so here the limit is 60,000. Government says we don't want GST beyond, on the value beyond 60,000. On 60,000 pay us the GST, right? Example I have covered. A Limited, a money changer, exchanged USD 10,000 to INR at 74. At 74 means 10,000 into 74. This is 7,40,000. So this is in the second slab. So this will be 1,000 plus 0.5%. Plus 0.5% of 6,40,000, because 1 lakh is covered. So 6,40,000 into 0.5% plus 1000, this happens to be 4,200. Hope this is clear. Next, tickets booking, air travel agent. Now this is as simple as it can get, nothing in this particular case. In air travel agent, just see whether it is a domestic air travel or international air travel. If it is a domestic air travel, you take 5% of basic fare. If international air travel, value is a bit more because high value tickets, 10% of basic fare. What is the basic fare? This is actually indicated in the tickets as well, if you see, and this is generally that amount on which that particular agent gets commission from airline. But what are we talking about here? Here we are talking about the services by an air travel agent to the customer, right? So 5% and 10%. I hope this is clear. So airfare, basic airfare is the fare on which commission is paid to the agent by the airlines. But this is what we are talking when the person, air travel agent, provides services to the customers like you and me. Okay, let's move to next. Okay, let's proceed ahead. Life insurance business is the third notified, rule number 32, subrule 4. Let's take 4 cases. 4 cases are covered. These are very, very logical in terms of how you need to calculate the value of supply. Let's see. Policy with dual benefits of risk coverage and investment, meaning which the premium that you are going to pay is one part is going to be for the purpose of your risk coverage, that is the pure insurance amount, and one part is going to be invested that you will get the returns in future. So this is the dual benefit, right? Our GST will be applicable with respect to life insurance, right? Not with respect to the investment. So if such allocation is intimated to the policy holder at the time of premium collection, meaning which that if I am a policy holder and the company has intimated that let's say 40% of the amount will be for your insurance and 60% will be for the purpose of investment, then the GST will be leviable on the 40% of the amount, right? So taxable value, that is for the purpose of GST, will be total premium, gross premium, minus amount allocated for investment, because on investment amount there is no GST, there is no service being provided, that is just invested in the market. Next, single premium annuity plan. Basically, I'm going to pay one premium, that is generally a very big amount. In that case, GST will be leviable on 10% of the amount. So 10% of the single premium where allocation is not intimated. If allocation is intimated, then on the portion which is with respect to the insurance amount, that will be taxable. Other cases means this is not a single premium case. This is not a case where I know the allocation. In that case, we have to take some arbitrary amounts, that is the law is going to give. So for first year, 25% of the premium charge shall be the taxable value on which GST will be applied, and from subsequent years it will be 12.5%. Basically, law is assuming that in first year 75% is for investment, 25% is for insurance, and from next year 12.5% is for insurance and balance is for your investment. And policy with only risk cover, there is no investment involved, then obviously 100% premium is taxable. It will be the taxable value. Now, fourth is again a second-hand goods margin scheme, rule number 32 sub rule 5. Now, this is a very specific scheme. Let's first try to understand what is the meaning and logic and the rationale behind this margin scheme. Let's see. What do you mean by margin? Margin basically means difference between any two amounts, that is known as margin. Now let's say I'm a second-hand dealer in goods, right? And there is this customer, Mr. Rakesh, let's say Mr. Ramesh, he bought a TV for, let's say, 1 lakh rupees. Okay, now when he bought this TV for 1 lakh rupees, he must have paid GST. Answer is, I hope this is clear. 1 lakh rupees was paid, and let's say 18% GST was charged. So GST, the government has got the GST with respect to this TV purchase. Now this is me, I'm a second-hand dealer of goods. Now let's say I bought this for 50,000 rupees and I sold it for 65,000 rupees, and I sold the TV as such, or after minor processing there were no major changes. Now tell me one thing. Till now, whatever we have studied, the GST will be levied on what amount? Sir, answer is 65,000 because that is my transaction value. But don't you feel this leads to double taxation? Why? Because when this was sold to Mr. Ramesh for 1 lakh rupees, GST has already been levied. GST has already been levied, and now you're again charging 65,000. In case of second-hand dealer goods, there is now comes the margin scheme in the picture, which basically says that in such cases, the margin will be taxed, that is 15,000. 15,000 is the value addition that I earned, and on 15,000 I will charge GST. Obviously, there are some conditions attached that such person should be a second-hand goods dealer. The person to whom I am selling this for 65,000 should not be taking ITC. Those conditions need to be met. But the basic approach, that the basic logic is that we have to avoid double taxation of 65,000, because once the 1 lakh rupees has already been taxed, and this is not something that is happening in business transaction. This person is not doing business of TV selling. He is just selling as a household item to some person, right? That is me, second-hand dealer. Okay, let's see. Applicability, this is only for supply of used goods. Mark this, used goods by a person dealing in buying, selling of second-hand goods. So I have the business of dealing in second-hand goods and I'm buying the used item. I'm not buying it for the first time. Normally GST is charged, this I've already told. The condition is that ITC should not be availed by the person to whom I am selling for 65,000. If he's taking ITC, then I have to charge on 65,000, not 15,000. Okay. Normally margin scheme 15,000 will be leviable to GST. If the person is taking ITC, then I will charge on 65,000. The second-hand good should be supplied as such or after minor processing which do not change its nature. Obviously, minor repairs are allowed, but the characteristics should not be changed. For example, I am buying, let's say, furniture, but I am completely changing the furniture from inside out and I am adding a lot of value and then charging for double the price that I have bought for, then the entire value will be taxable. If selling price is less than purchase price, for example, I bought for 50,000 but I am selling for 40,000, then obviously the negative value has to be ignored. What if ITC is availed by recipient? Then normal valuation, margin scheme will not apply. Okay, this is one example that I have taken. Example, I bought a bag. This, I think it can be done during the point of defaulting borrower case. This is a general example that we will use in next topic. The basic example of margin scheme I have already covered on the notes page. Okay, let's see. If depreciation is claimed under section 32 of the Income Tax Act, if any person has claimed depreciation under section 32, then the margin will be calculated as consideration minus depreciated value. In other cases, selling price minus purchase price. Ignore if negative. This is just a general point. When depreciation is involved, then depreciated value needs to be reduced. Okay, now this is important, for which we are going to use this particular example. Let's see the concept first. Purchase value of supply of goods repossessed from a defaulting borrower. Now please understand what is happening. I borrowed some amount and I bought an asset, right? And that asset has been repossessed by the person who supplied the finance. Now he's selling this. Now what will be the value of that asset? For that we have to learn a specific formula. Let's see. Many a times goods taken on loan are repossessed by the lender in the event of default in payment of loan. The purchase value of such repossessed asset, here also that person is not going to charge GST on the sale value, he is going to charge GST on the margin. Let's see how to calculate the purchase value of repossessed asset. If the defaulting borrower is registered, then the repossessing lender agency will discharge GST at supply value without any reduction. So if the defaulting borrower is registered, it means he would have taken ITC. Then in that case, there is no case of double taxation. Hence, the GST will be levied on supply value, that is the transaction value, and not on margin. Hope this is clear. This is simple, that there is margin scheme not applicable. It simply means that when the defaulting borrower is unregistered, purchase value will be the purchase value in the hands of such borrower who has defaulted, reduced by 5% for every quarter or part thereof between the date of purchase and date of disposal by the person making such repossession, that is the lender. Quarter means calendar quarter. Now I know this, you must be feeling some friction in this particular topic. So let's take an example first. Okay, let's say that I took a car Alto on, let's say the purchase date is 15 June 2023. The cost was 4 lakh. GST was, let's say, 18%. Total cost happened to be 4,72,000. Now I thought of buying a new car. Okay, so now I am in the mood of buying a new car. So I sold this one to a second-hand dealer, Sani Motors. Okay, the sale was materialized on 6th August 24. Sale value was 3 lakh. I bought for 4 lakh. I'm selling for 3 lakh. And this Sani Motors sold this further after no or minor processing to Sharma ji for, let's say, 3,50,000 on 18 September 24. This part is with respect to margin scheme that we have already covered. GST will be levied on the differential margin, that is 50,000. In normal cases, it would have been levied on 3,50,000, but because this is a margin scheme and we have to avoid double taxation, GST will be on 50,000 rupees. Now, my focus is on this case of repossession. What if I took a loan of 4 lakh rupees or 4 lakh 72, whatever it is, let's just write like this, loan from Bajaj Finance. And now I was not able to pay off my loan. This now car will be repossessed by the Bajaj Finance. And now the question comes as to what will be the value of Wagoner car for the purpose of GST by Bajaj Finance, because we have to reduce the purchase value from the sale value. For that, the law says that the purchase value will be whatever it costed to the original borrower minus 5% per quarter or a part thereof, and we have to take calendar quarters. Let's see in this particular example. In above example, let's say if I had purchased the Alto car from Bajaj Finance, but I could not repay the loan. The car was repossessed and now it is being sold on, let's say, 3rd August 24. The purchase value of repossessed car, here I have taken 4 lakh. You can take this as 4,72,000 including GST. But let's say that I took the, let's assume the total value of car as 4 lakh. Purchase value of repossessed car will be 4 lakh. That is the cost in the hands of original borrower. Please read this. Purchase price in the hands of original borrower minus 5% of 40,000 into 6. How did you come to this figure of 6, sir? We have to calculate the quarters. Quarters from the purchase date. I bought it on 15th of June until, let's say, in this case, it was 6th August 2024. Let's say the Bajaj Finance sold on 6th August 24. So from 15 June to 6th August, if you calculate the calendar quarters, April, May, June will be first quarter, not June, July, August. Okay, calendar quarters, not the actual date quarters. So till June, it will be first quarter. July, August, September, October, November, December, January, February, March, April, May, June, and July, August. So this will be my 6th quarter. So 5% of 40,000. Just correct this small thing. This will be 4 lakh. This will be 4 lakh. So 4 lakh into 5%, 5% has been given by law and these are 6 quarters. So this will be 120, 4 lakh minus 120, it will come out to be 280. Okay, so now 2,80,000 will be the purchase price in the hands of Bajaj Finance, that is the lender. So chances are not very high of this coming in the question, but still, even if it comes now, you are clear with the concept. Okay, next is the concept of valuation in case of vouchers, stamp, coupons and tokens. Value of supply in such case is the money value of the goods services which are redeemable against such token, voucher, coupon. So obviously if it's a coupon of let's say 100 rupees, then 100 rupees is the value of supply, but this is not applicable to postage stamps which come with their own value of 1 rupee, 2 rupee, whatever it is. Okay, rule 32 sub rule 7, you can ignore this because there is nothing notified with respect to this rule. Now comes our last topic of pure agent services. This is basically a concept of mere reimbursement of expenses. This is being talked about in one of the circulars in chapter number 1 if I'm not mistaken. With respect to the airport operators, they charge the PDF, passenger development fee and user development fee. There we covered the concept of pure agent. What happens in pure agent concept? Supplier does something for recipient purely as a request, purely on request of the recipient, and that later that amount is reimbursed by the recipient. So that particular value which is done, that particular work which is done as pure agent, it is not liable to GST. That is the concept of pure agent services. There are certain conditions to be complied and there are certain conditions for a person to be a pure agent. Let's cover that. That is our last topic. GST implication I've already told that amount will not be liable to GST. Conditions to be satisfied for exclusion of expense from value. The payment arises out of a contract between the recipient and a third party and supplier acts as a pure agent. Let's take a simple example. This is a supplier. This is a recipient. Okay. There were certain goods on which supplier did some work for recipient, and apart from that these goods were to be transported to the recipient. This transportation contract was between the recipient and let's say a third party, Mr. T. This is Mr. R. So the contract was between T and R, but recipient requested supplier to pay to T. He requested supplier just pay that, just pay some amount to T, whatever the amount is, and I will reimburse it later. So this is a case of pure agent and this is a reimbursement of expenses because supplier is going to pay to T and later reimburse from R. Okay, his service to recipient is something else, whatever he has done with respect to goods. Okay, so first condition is that there is some contract, third party contract between Mr. T and Mr. R. So let's see, this is clear. Recipient authorizes supplier to make payment on his behalf. Supplier is not doing anything on his own. Supplier shows the payment separately in the invoice. So when the supplier charges the invoice, gives the invoice to recipient, one amount will be for with respect to his services and second reimbursement of expenses with respect to the amount paid to the transporter T. The supplies procured by supplier from third party as pure agent are in addition to the supplies that he does or he provides on his own account. Obviously, supplier is providing some services to the recipient. Apart from this, he is doing the work as a pure agent. The pure agent should not be the pure agent related amount should not be the whole and sole amount involved, right? There is some supply taking place and beyond that pure agent services are being provided. Meaning of pure agent, supplier, all the conditions need to be complied. So supplier will be a pure agent if he enters into a contractual agreement with R to act as his pure agent to incur expenditure cost in the course of supply of goods and services. So they are into a contractual agreement that you are going to do this work for me and I will reimburse later. He does not hold or intend to hold any title to the goods and services so procured or supplied. A title will be given to the recipient. The supplier is doing only and only as a favor and as an administrative convenience for the recipient. He is not holding any title. Title is with respect to the recipient only. Okay. He does not use anything for his own interest, such goods and services so procured. For example, tell me one simple thing. Let's say there is a CA who is providing services to a client and suppose he goes for audit of client in Mumbai and he stays, let's say he stays in Hyatt and there is a bill of let's say 8,000 per night. This 8,000 is reimbursed from the client. What do you think? Do you think this is a pure agency service? Will this 8,000 be counted as a pure agent related amount which is excluded from the value of supply? Answer is no. Why? Because this person went and lived in the hotel. The actual benefit of going and enjoying the hospitality of Hyatt Hotel was enjoyed by the CA. So this is not a pure agent service. Now read this. The supplier does not use for his own interest such goods or services so procured. So example, hotel hotel fees, hotel related expense is something that is used for the interest of the CA. But let's say if CA paid some fees to ROC which is reimbursed later, can this be counted as a pure agent amount? Answer is yes, because the benefit is derived by the client, not by the CA. Next, the supplier receives only the actual amount incurred and nothing beyond that. For example, the pure agency related service was, let's say, of 5,000 rupees. He has to recover exactly 5,000 rupees. If he recovers 5,001 rupees, then it will not come under pure agency service. That will be, entire amount will be taxable and included in the value of supply. Okay. Now rule number 34, this is very, very normal, that rate of exchange of currency other than INR for valuation. Now let's say the valuation is given in USD or pound, then how to convert? In case of goods, we have to use the rate of CBIC rate, the board rate, as on the date of time of supply, and with respect to services, the rate has to be determined as per generally accepted accounting principles, again at the time of supply of the service. This is not very relevant. Rule 35 is something that we already know, we don't need to do it separately, that when the value is inclusive of GST, we have to do reverse calculations. For example, if let's say 256 is inclusive of 28% GST, that means it represents 128%. So for that, we have to divide 256 by 128%. This will come out to be 200. So value of supply will be 200 plus 28% GST. That will come out to be 256. So this is quite logical. This was not supposed to be told separately, but law provides it, right? So this was all with respect to our valuation of supply. I hope this was useful. Do ensure you are sharing this with your friends. Till then, all the very best. Study well. Take care. Be safe. Bye bye.